All right, highlight of the day. Let me tell you something. I'll say this phrase invisible buying, invisible selling. What does that mean? Well, visible buying and selling is in the book, it's on the ladder. Whether it's real or not, limit orders are visible. They're laying in the book. The ones closer to the last traded price are probably more real than one that are 10, 20, 30 ticks away from the last traded price. All right. So, what's invisible buying and selling? That's essentially market orders. You don't see a market order until it what? Executes. Could be big, could be a one lot, whatever. Market orders are invisible until boom, they're executed. Limit orders are not invisible until they execute. No, they're visible until maybe they execute. Invisible orders also are market orders, which also is what moves the price of anything because it's the aggressive type. You need buy market orders for the price of something to go up. When there are a lot of buy market orders, there's higher prices. Market orders, that's the order type that moves price. So when you have an imbalance of more sellers who want to sell it than buyers who want to buy it, that's a pink triangle. You got a big one here, 1,220. That means plus or minus three ticks from the last traded price. And the last traded price is ground zero. That's where the fire is. The last traded price, where the fire is. The closer you get to it, the more warm you'll be, or more realistic you are, or more serious you are buying or selling. Okay. So plus or minus three, those orders that are newer, we have a way to filter it. So it's just not what you see on your dome, but specific things that are done in those orders that we're able to follow through MBO, through the CME, that say, okay, now we take those orders that we deem to be serious, but they're limit orders, and we match them, compare them. And when there's an imbalance of more than, let's say, 250 sellers than buyers in this area, and there's more on the sell side, we'll get a pink triangle. There's more on the buy side, you get a blue triangle. But those are visible orders of people who want to sell it. So there's more people who want to sell it versus people who want to buy it within a plus or minus three tick area or six tick range. So we also throw the number here. This is minus 12 something, 1,200. That's a big number. They're generally around 250, 400. What's important though is, does it get breached? Meaning, does it go up? Does price go above the pink triangle or below a blue? In this case, we're going to say this is a pretty big imbalance. Let's watch price to see if it breaches it. And when it does, right in here, we're anticipating it could. So then when it does, we know that's bullish. And that could be your trigger to get long if you're already bullish. But you get another pink triangle, this 366. So you know this area has more sellers than buyers, but they're visible. We're comparing limit orders, limit buy orders, the limit sell orders within three ticks of the last traded price. Okay. And we filter the order, like I said before. So it's just not every single order that might be there. There's a way that we filter to try to qualify an order to enhance that it's serious. It's not some of this algorithm bullshit. Now, when you go and you play it, watch this area right in here. You're going to see the laser turn red. I just paused it. Our laser is this, which goes through to the bottom if it's red. It's also shown right here. But it goes green to red, which means the market sample size of other people's orders, or not orders, positions. Positions and orders are different. Other people's positions, sample size. If it's green laser, there's more longs than shorts. If it's a red laser, there's more shorts than longs. If you're bullish, you want more shorts in the market. I mean, if you're long, let me say that. If you're long, you want more shorts, not more longs. Get that out of your head. That's what people think in the early stages of their trading and investing. All right? No. If you're long and many other people are long, then you have competition. Let's not get into why that's not good. So just go on. Yeah, if you're long, you'd prefer a lot of shorts because shorts equal future buyers. Future buyers is what you are going to need So your long trade could be a profitable one. Now you get a blue triangle, which is what? More buyers who want to buy it than sellers who want to sell it. Limit orders. When I say invisible buying, you must have had invisible buying to navigate through this imbalance of sellers. The pink triangles are showing us that there's an imbalance of more people who want to sell it than people who want to buy it. How do you get through that? Well, all the limit orders got to just nudge up. No, that you're going to have to get market orders to participate. Doesn't mean the limit orders turn to market orders. They could, but they're still market orders. Or you just get a market order that nobody could see until it's executed. So just know that market orders are never visible until they're executed. And it's important to kind of know when there's big market orders executed. We have blue and pink boxes for that. But also remember, everybody could see that. And so when you see something that everybody else could see, it's not that big of an advantage. How you read it could be an advantage. The fact that you could see it's not an advantage. So if you subscribe to charts that show you things that every other charting software in the world pretty much shows, well, there's not an advantage to that particular feature or that particular tool. So either way, breaching pink, which means how do you breach more sellers than buyers? That's a pink imbalance. That's what that means. You're going to have to do it with invisible buying, which is another way to say it, buy market orders. They come in. And when you do that, you're also reading the market as, whoo, that shouldn't have happened. Because when there's more people who want to sell it than people who want to buy it, price should go down. Now you're reading it by saying it's not doing what it should do. And anytime someone or something doesn't do what it should do, something is wrong. Doctors use that when trying to diagnose a condition, correct? Detectives use that when trying to interview a witness or a suspect, or to make a witness a suspect. When something happens that shouldn't, something is wrong. Now, in this case, something wrong meaning we should go down. So something wrong would mean we're going up. We will go up. We might go up because we shouldn't go up, and yet we are. Something is wrong. So there could be follow through, in this case, to the upside. Because we shouldn't go up. We shouldn't do something, and yet we're doing it. This is a really important part of trading, whether, and I'll pause it again, whether you're manually putting in your trades, whether you created an automated system that you're watching and tweaking, right? Everybody is into sometimes using AI to help them, but they're still gonna have to watch it. They're still gonna have to understand it. They're still gonna want to tweak it. And why is your AI better than my AI? Right? Think about that for a second. Why is your AI better than mine? With all speed, let's just say all things being equal. If AI is, I don't want to get too deep into this, but if AI is the end all, then it should be an agreement, right? If I put in a question to Chat GPT and then another same question to Gronk, I should get the same answer, right? Similar. If it wasn't too complex of a question, should get a very similar answer. It's AI after all. But what's interesting is there are so many variables into, what's going on in a market, bids, offers, timing, and then all the inputs as to whether a stock should be up or down, whatever. And so there's just as we go on, there's going to be discrepancies, I would imagine, with the decision and analysis of what AI thinks. But what's still going to remain is whatever it is you're trying to do, is it not doing what it should do? Remember, when something is not doing what it should do, there's a problem. In this case, it's not going down, so it'll probably go up. And there were a couple other interesting kind of tells in this example, not just breaching this big pink, not just having a blue, now showing more buyers that want to buy it than sellers that want to sell it, but the laser went green to red, which is bullish. So once something is not doing what it should do, there's a problem.